Good morning, ladies and gentlemen, everybody. Welcome back. Or, well, welcome back to me. Yay, 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 everybody. Market's been going a little crazy lately. Also, I've been out of town for the past week or so, as you guys already know. But yeah, market's been, I wouldn't really say it's been going crazy. It's been doing pretty much what I think we all would expect in 2026. Well, some of us, right? We have been expecting a bear market to come and start in the year of 2026. Hasn't really happened yet, but that's fine. Right now, we're kind of watching the NASDAQ and ES slightly downwards for the moment. I do think we're going to be seeing the SPY or SPX come back down to the price of around $677. So that the 50 or so that the SPY and SPX can backtest its 50 SMA, in which it broke out yesterday, I believe. Let's see. We hit the 1 hour there. Cool. Yeah, so just for the moment, probably going to be watching SPX, SPY down to as close as possible to the price of 607. Wait, basically 677, give or take there. So whether or not it drops to 677 like now, or into the open, but just kind of in general, that's kind of an area where I think the markets would like to see today. So pretty much the name of the game is, as the market sells down into 677, we first would look for a counter bounce back up, and then if breaking it down later, sure. But yeah, that's the 50 SMA. The high of the market right now on, well, not really the high, but either way, so that's pretty much what we're looking for the moment, down to 677, give or take. And yeah. Good morning. The trip was good. I can tell I'm getting a little older. Obviously, I'm not old, but I can feel the aches and pains in the body for sure. Yeah, snowboarding for 4 days down a big mountain. It's not as easy as it was when I was younger. That's for sure. So, anyways, yeah, thanks for asking. It was good. It's always fun to get out with the boys and go snowboarding. So that's kind of pretty much what we did. I kind of hung out, did some trading and investing on the phone, was on the lifts, looking, So I am very caught up to speed on the market. It's not like I'm coming back from vacation and don't know what's going on. I watch it every day. So I'm pretty up to speed. So all we did yesterday was a mean reversion back to the 50 SMA, which resulted in a really big bounce. So I know a lot of the internet and the world and just everyone's really happy about yesterday's bounce. But it was really just a mean reversion back to trend, where this morning we're pulling the market down to 677. We're pulling it back to trend, right? So we should be about there, right? Close. We're going to get there in a second or two. So as we come down to 677, and then not only that, you can see here on the top right corner, I've been getting better at using some fib stuff, so I'll start presenting it now that I have like even a slight degree of, kind of knowledge on it. But we're bringing the ES down to this price here of 678,978. This is a monthly Fibonacci, so this is a monthly 61.8. So we're basically inside the golden pocket of the previous month of trading action. So this is a monthly golden pocket price that we're currently trading inside of on the ES this morning. So we are coming into a monthly 50% retrace level here. Matching that up with the 50 SMA is kind of interesting. So this little area that we're coming into here on ES, It's like a double over under. We have the 50 SMA here, and we have a monthly 61.8% retrace level. So again, if the market today on the ES SPY just in general doesn't hold 677 and it were to break that down, you would be going below the SMA calculation today, and you would then be re-transitioning down below the golden pocket of the monthly price action for the market. So this is a little bit of a focal point that we're coming into, a little bit of a liquidity area. We'll see how the market uses it. Either we're going to hold it here and bounce for a little bit, maybe keep the market up going into the open. But if we do end up coming below 6,789 today, yeah, 6,789 or so on ES, which is really just, right around 677 on the S&P 500. It might constitute for the market selling back down. We'll see. I'm just skeptical that the market's going to hold up and just rally into a beautiful long off of that mega bounce yesterday. But you guys know how it goes. It's always the name of the game, whether the market is going to transition positive or remain bearish. Now, everyone thinks that maybe the market's back to positive. It's not. All yesterday was simply a huge bounce back to potentially resistance. And I'll bring up TradingView right now to kind of hit home on that one. One second. Where are we at? TradingView. There we go. All right, so bringing up TradingView here. Yeah. TradingView. What was it saying? Yes, 50 SMA. Cool. All right, so this is the 1 hour. So yesterday's high of day was also the 1 hour 50 SMA. So, if you look at it from an SMA perspective, past couple days, weeks, whatever, was a breakdown, bounce back to 1 hour trend, and so far the market is not going above. We're staying down. All right. If you were to look at it on the 30-minute, it's just going to look like that, where the market just from back here broke down, stayed down, huge oversold bounce, back to SMA trend, broke out, went to the 1 hour. This morning in the pre-market session, we're pretty much just holding resistance at the 1 hour and then breaking it down towards the 50 SMA. So if I bring us into the extended trading hours so that you can see the price action within the regular trading hours SMA calculations, it's going to look like that. So currently in the after hour sessions, we've simply just hit our 1 hour 50 SMA area, some Fibonacci stuff. We're now taking the market. Fucking dog hair. Love it. We're just taking the market from the 1 hour down to the 30-minute right now. And if the 30-minute breaks down at some point today, we'll then just, if we break the 30-minute down today, there's more opportunity for selling pressure in the market. And obviously in the short term, right now, or within 10, 15, doesn't matter, just in general, short term, if we're not breaking below this is going to be kind of either a hold or kind of a hesitation area. It might be too weak for a huge bounce, but just in general, right? That's kind of the general flow of the market would be from 1 hour back to 30, maybe bounce the 30 for a second, maybe hesitate. Then if price and acceptance below, we could therefore start more of that bearish selling action. So we just got to make sure that we know what we saw yesterday and how that leads us into today. And what you saw yesterday was an oversold bounce back to trend. So you could either see that as an oversold reversal, you could see that as a mean reversion back to shorter term SMA trends. However you want to look at it, completely fine with me. And all we're really doing in the pre-market is what I like to call the SMA transition, which is just the transition of resistance at in 1 hour down to the 30 minute. And it works both ways. When you break it out, you can break out the 30 minute and run up the 1 hour. Resistance at 1 hour, back to 30. If 30 breaks down, market transitions more bearish, right? So, for the moment, part of the day trade short down to that SMA calculation's over, all right? So it does kind of depend if we're going to start breaking this down or not, right? So that's that. And if we were to continue going lower, I don't really have, well, not necessarily. Just looking at all of my larger term fib stuff, I don't really have much we would go down to for the moment. Not that I couldn't find something, but yeah, I don't really have anything that we should totally be going down to for the moment. Unless it's our, one second, I'll bring this up here. Oh, wait, I did miss something. Oh, that's even better, I guess. Well, anyways, good morning to you guys. Cheers. Yeah, so I'd be a little less bearish in the moment as, like kind of just thought process coming into this low where we're at right now, just because I know we've completed that 50 SMA move. Now it's just a matter of whether or not we kind of continue below that. So, yeah. And there's a bunch of other thoughts I have going on. I don't want to drill people to death with fib stuff, but there, when you look at fib stuff, there's a million different things you could possibly do with a fib. So it's like, that's why I still kind of talk a lot on the SMA trend, because it's relatively simple. Fib stuff can get a little confusing, I feel like, for some. It took me a long time to even kind of think I have an idea of how to use it properly. But anyways, and even here, let me bring this guy down. All right, so this is the NASDAQ up here on the left, and this is our monthly Fibonacci. So if we look at the bigger, kind of like more macro stuff, if you're looking at the macro fib here, this would be a monthly. And same thing for the NASDAQ. We're trading right in the golden pocket of the last 1 month's price action. So you're not at a very, you're not like an oversold, overbought monthly scenario based off past month's price action. You know what I mean? So you got the tech sector right in the golden pocket, which doesn't make for the, easiest of trades, if you will, on the bigger scale. It's not oversold, not overbought. See, like what we just saw was an oversold condition. That's why we had that huge reversal long over the past couple days. Prior to that, we were in the golden pocket. Right now, we're in the golden pocket. And so, like, and on the right here with ES over the past month has exited the golden pocket, right? So if you're looking at the ES here, this was, I don't want to draw on that chart. I'll do one. So we were in the golden pocket, right? And so just the other day too, was that yesterday it was yesterday, right? Yeah, or past 2 days now. Sorry. That big reversal was also the ES nearly completing its 161 destination of its monthly Fibonacci. Also, it's weekly. So if you looked at yesterday's reversal long on the ES, if you were looking at the ES too, it would be, one second, let me bring up this guy here. So just an FYI, I'm not really, for the moment, I'm kind of just doing some analysis. Not currently in a position, but I'm going to be leaning more bearish for the moment on the day, just as we kind of come down into this SMA. And then if we start to bounce it and hold it, sure. But for the moment, it's just I don't really trust the market. I haven't even had a second to look at the VIX, but for the moment, that was the expectation, as we would bring the markets down on ES to the 6, 7, 8, 9, pretty much because it lined up with the SPY's 50 SMA, right? So if you're looking at Fibonacci in a linear market, like linear thought process, it would basically be if you take out 6, 7, 8, 9 and transition next fib down, you go there. Markets don't move in straight lines, but that's pretty much the basics of Fibonacci, right? And Brandon, my business partner, has taught me this stuff for years, and I've just never, I don't really teach people it because he knew it so much better, so I never really had a need, and but anyways, this is a lot of stuff that he's taught me over the years. It's kind of fallen into my lap, but anyways, you guys get the point. That's a linear thought process of Fibonacci, right? So basically, right, break fib here, go next fib up, break fib here, go next fib up, etc. Don't break fib, find resistance, back test, right? Don't, etc. back test. So it's the same exact process of every single stock market strategy, for that matter, which is pretty much what's funny is, like, pretty much everything in the market revolves around mean reversion in some fashion or another, right? Price extending away, price reverting back in some fashion or another, right? If it's a 10 SMA, a 50 SMA, a 200 SMA, whether it's price action going up and pulling back, whether it's just Fibonacci going up, it's pretty much all markets do, just go up and down, right? So that's that. But more importantly, what I was trying to get to here before I kind of rambled on about whatever was why can't I say, it's because I'm on a 1 minute. Yeah, so yesterday, so this is the ES2. So yesterday, that big mega bounce you saw was really just the completion of the 161 destination on the S&P 500 or the ES futures based off of the previous week's trading action. So the Fibonacci sequence of the previous weeks, blah, blah, blah. Right there, it's down into the 161, right? So if you were to think about the previous week and then also the, 1 second. So this is last week and then last month's, right? So if last week and last month's 161 were pretty much completed. We shied the monthly destination because we caught support on the weekly destination. If you were to think about the weekly and the monthly as just a zone, then you would arguably just would be thinking to yourself yesterday, the completion of the weekly and the monthly 161 destination happened basically on the same day at the same time, because it just so happens that the Fibonacci's overlap in that case, right? So yeah, that's pretty much that. So when I look at Fibonacci structure based off of the monthly and the weekly across both the NASDAQ and the S&P 500, first things first would be this. First things first would be the NASDAQ here. If we look at the monthly structure on the NASDAQ, we are currently in the 50% to 61% zone. So we're directly in the golden pocket for the NASDAQ. Therefore, we are in this playing field, right? So if we look at the monthly structure right now on the NASDAQ, we're inside this playing field from 25,127 to 24,917. All right. Obviously, to play into the next market, it would be above or below, obviously, the highs or below here, etc. Right? So, in the most linear thought process possible, that's what you would say. Above here, we can open the door for next level up. Below, we can open the door for the next level down. That is like basic elementary thought process, but essentially it's true, right? but the market isn't that simple and it's not always that linear. And as we all know, right, we're not children here, we get that. So that's that, right? So when we look at the NASDAQ, and we think about price and we think about the market, if we're not that optimistic on the market just running straight up, then we'd be maybe more optimistic on it going down. And if that's the case, the next level for the market based off of longer term time frames is the market on the NASDAQ dropping to 2004,917, right? That's as it relates to the monthly scale. All right. If we look at the ES monthly, the ES is not in the golden pocket. All right. It's actually having a little bit more weakness, or not necessarily, but just in general. We are currently at and just below the 78.6 fib. So that means we're kind of within inside this playing field, either down to 6478 or a counter trend bounce back to 6 whatever. What did I just say? 6808. Right? So those are, if you're looking at the monthly structures, if you're playing on the NASDAQ, you might be looking down at the 24917. And if we're looking at ES, if the market doesn't break down today and we actually kind of boost up into a long, one of the first levels you might look towards would be 6,808 based off the monthly structure there. All right. Now, if we start dialing into the weekly structures on both of those markets, we might come up with a slightly different story, which we will, right? So, one second. I don't need that. Cool. When we look at the weekly structure here, I'm going to start with I'll start with ES. So when we look at the weekly structures, right? We have traded down into the 161. We have now traded back to the golden pocket, which, you know, there was a little bit of resistance at the golden pocket. We've traded even all the way up, etc., to 38.2, now rolling back down, all right? We know that the price that we're currently at on the market, pretty much this fib, 6789, that's the 50 SMA on the SPX. And we also know that if the market transition below that SMA and it doesn't hold support, we could flip the market back into kind of a sell move. So this is a kind of important over-under level we're trading at, right? And so we now know that if the S&P 500 does not hold support and it starts to sell off again because it breaks down its 50 SMA, the next weekly structure fib would be down to 675691. So if we go into a sell move today, we're probably going to see ES go down there. Now, the next weekly fib structure also lines up with the 30-minute 50 SMA here. So that would be a back test of this uptrend. Remember yesterday how we hit the 161, the market bottomed right in about the middle of the, or wait, was that 2 days ago? Or was that was yesterday, right? Yeah, I keep freaking, I don't know why I keep messing that up. It just doesn't look right, but anyways, we bounced the 161 yesterday, and we broke over the 30-minute 50 SMA. So the 30-minute market enters a long, right? And that long goes all the way back up to here, whatever, right? And this morning, as we pulled down, we're coming below the regular trading hours 30-minute. That could basically be a breakdown, and then that would lead us down to this 50 SMA for a back test of the 30-minute uptrend on ES, and then it'll just be a back test of the weekly structure down there at 6, 7, whatever. So that's something I'm kind of thinking about as far as the weekly goes. 1 second. But again, remember, markets can still do whatever they want. That's very linear kind of thinking. I mean, I could have just Control-Z'd all that. Oh, no. That's lame. I can't do that. Yeah, so, and that's just the weekly, and there's still, sorry, let me take that off. All right, and so, you know, something else, see, right now, as we do this market on the ES has created 2 5-minute fibs down, And we just completed the first ones, 161, and then we got another one. So we're kind of starting to come into the 5-minute 161 completion. The oversold 5-minute market would be the 261s, which now line up into that that weekly that we were just talking about there. So I'm going to delete those because I don't want to get the stuff too busy for you guys right now. But anyways, so now let's go over to the NASDAQ weekly. Now, if we look at the NASDAQ weekly, all right, the next level down on the NASDAQ is what? Next level down for the NASDAQ is 2,049.06, right? So that would be a NASDAQ short target. But what comes first? Right, remember we talked about the NASDAQ's monthly, right? So the monthly we're going to run into at 24917. The weekly is priced at 24906. So your current sell target on the NASDAQ is a zone from 24917 to 24906. Algorithms, traders, and investors like ourselves could be willing to use any one of those two macro levels and fibs to either hold the market, kind of slow the short. They could be used as cut zones, but generally speaking, as we come into these levels, we would not expect to break them right away unless momentum is extreme, right? So we're completing the monthly Fibonacci sequence from the 50%, which isn't a fib level, by the way, that's Dow theory, to the 61.8. So that short is complete. We just hit the monthly 61.8% retrace level, and whatever computers, traders, and programs were trading that trade is done. That sequence of events is complete. That one's done. Now it would be what's the next sequence of events and mathematical probability and market movement, right? So, yeah, all that. I hope that makes sense. So, I'm going to have a sip of this coffee because clearly I need to think more. I'm not thinking enough yet. I haven't, So, let me drink this. Bonjour. Good morning, everyone. All right, so that is that. And now it's it's about whether or not we break this stuff down, right? So if we start breaking down the 61.8% fib on the NASDAQ, and, oh, wait, I think I have a short on. I think I do have a short on. Oh, no, I don't have one on. That sucks. I was going to say, I'm pretty sure I had one on, but I took it off earlier. That's right, on a smaller trade, but that's okay. I had to double check there. So we're clear on all that. That's good. Let me delete some of this stuff. Here we go. Get out of that. Perfect. So now as we come down into the weekly, like I said, this is where it's about whether or not, I forgot too. Hold on. There's, maybe I'll mention something about it real fast. 1 second. Okay, lastly, something else is this here, this chart, everything you're seeing here. This is the last quarter's price action. So if I were to measure, this is the last 1 quarter, right? So looking at the quarterly markets. For the last quarter, the S&P right now is basically at its golden pocket, right? I think this is, one second, let me just double check. Yeah, it's going up. So right now, again, this is really big stuff. More, this is quarterly stuff, but nonetheless, we're like right in the golden pocket, and if you look at the Nasdaq, we're pretty much right in the golden pocket, right? But we are currently below and breaking, right? So we've broken down this morning the 50% retrace on the quarterly market, right? So if we're not going above the 50% level for the quarter, right, or the past, we're going to be going down to 602.01, right? Same thing here with the SPY, right? If the SPY isn't holding support here on the quarterly, right, or, it's kind of goofy saying that, but if we're not holding support on the quarterly, right, then the next level down for that is going to be 671, right? So when you start combining that with the SMA trend, and if the market does in fact just basically backtest SMAs and whatever, and then we just roll resistance down, that's where we're going to go, right? So if we do kind of enter back into more of a selling market, which we're kind of doing it right now, we will arguably be looking down towards some of these fibs that we're talking about. And it can really just kind of be expected because it's just kind of what happens. But anyways, so that's pretty much that. We've covered the quarterly market on the NASDAQ, the S&P 500, the monthly, the weekly, etc. Ugh. Excuse me. So, yeah, hopefully that all makes sense. Hopefully you guys enjoy all that. Now, as we come down into this, this weekly, let me double check some other things. Yeah, we're also coming to the 78.6 level for yesterday's price action. So, I mean, we do have quite a few little supports here. I don't know if we're going to bounce it just yet. I wouldn't be bearish down here. It does look like we're arguably going to be trying to bounce the market a slight bit down here. We'll see, though. The momentum is what I'm looking at, trying to gauge right now. But my computer is just really being, there we go. Hold on, let's see. That's debatable. I mean, we do have not the greatest momentum down here. We have decently bearish separation. But we are maybe starting to get some sort of bullish crossing on the stochastic. So that's something else I've been testing here at some of these fib levels is stochastics. Seems to work relatively decent. Excuse me. Freaking eyeball. And then as far as as far as anything bouncing, ES back test of 6, 7, 8, 9 would basically be like, I don't want to say best case scenario, but that's a thought there. Actually, the first back test would be about 676.15, which is right there. You could be looking for some 1 minute stuff, right? So like on this bounce here off of 24906 with the NASDAQ, right? Some of the 1 minute markets that aren't balanced would be like right up to here. So if you go for like some of the earliest stuff on the NASDAQ, you'd be looking for this bounce to be up to like 2490 right there, because that would be the golden pocket of this 1 minute that's not balanced. But like I said, this bounce that we're getting right now, where is my other chart for that? I don't know. It's right there, but let's see. SPY, there we go. So right, this bounce, so that little bounce, you could have scalped, right? I'm just thinking about all these little trades. Not really doing much myself for the moment, but like even this little bounce here, we pretty much just did a NASDAQ, right? So if you look here on the upper left, we're kind of doing a NASDAQ weekly 38.2% bounce. At the same time, we're making that bounce. We're back testing the SPYs quarterly, right? So if we can start getting through and kind of flipping through the quarterly level here at 676.15, that's going to be that next little algo pop that helps drive the market up. Then we'll start to kind of close out some of these 1 minute imbalances that were just created on the way down. If that continues up, we'll just end up getting up to the 61.8% retrace here on the ES, which is 6789, etc. So, and again, we're also just kind of bouncing off the Nasdaq's 78.6 level from yesterday's price action. So pretty much this little low point that's starting to bounce slightly is the it's the monthly Nasdaq, and it's the daily Nasdaq from yesterday, and we're currently catching slight little hesitation off the quarterly on the S&P 500, right? So I know that's a lot to take in, but yeah. So, gonna get over to the VIX now. Obviously, the VIX got just smoked yesterday, but the VIX would also be right at the 50 SMA because the SPY is. So there's that. So I should already know that. 1 second. I see. Need this bad boy to go. So trading hours. Yep, the VIX is just starting to get back over its 30-minute 50 SMA. But yeah. Yeah, so again, like today is the day where we're going to have to decide if we want to shift the market below the 50 SMA or bounce it. I'm going to be leaning more on we're going to shift the market back down just because, I don't know. Why not? I just think yesterday for the moment was just basically a big oversold bounce, and now we're just gonna sell the market back down again. I could be wrong, obviously. But yeah, so that's what I'm watching, right? I'm watching to see if we do in fact maintain. Damn it, where's my other stuff? There it is. No, it's not. Yeah, I'm seeing if we maintain the breakdown of today's 50 SMA, or if the VIX ends up breaking back up, and so on and so forth. So yeah, if we end up breaking that stuff down today, then obviously we'll see some pulling back, and we'll look for some fibs down. But for right now, I think you got to be a little cautious on the move to the downside because I think it's sold off quite a bit. We're coming into the NASDAQ monthly level. We're coming into the NASDAQ weekly level. We're coming into the NASDAQ daily level. So we would need all of those to basically break down for this market to continue sliding. So what's the more likely event, right? Is there little counter pop long before we break down? We'll see, right? I just, shorting into that's kind of tough because there's a lot of stuff lined up there. Oh, gosh. Whew. Yeah. But like I said, I'm definitely leaning more on us rolling the markets today. So I'll be looking more in the down direction for the moment and looking more at counter pops back to selling down, especially if we stay below the 50 SMA, which we currently are this morning in the pre-market. But again, this is all pre-market stuff. The open is what matters. We could easily drive price down now and then into the open, spike it back up. So there's that. If we look at the ES market here real quick, I just want to bring this one up. I'm probably going to delete these just because I don't want to be too confusing. But if you look at these two candles here on the 5 minute, they don't have any golden pockets, right? And basically, as far as Fibonacci goes and just how the universe goes and balancing goes, right? These are both unbalanced, right? So at some point those could get filled, but I don't think about those candles. Well, those candles I think about the same as any others, but just it's more about these two candles did not balance themselves, right? So that's inefficient. And when I say inefficient, the markets like to be efficient. And and actually I've studied Fibonacci now a little bit more than I have in the past, but obviously you guys know it pretty much is everywhere in the universe. We've all known that for a long time. But the one that kind of started clicking for me when I started applying it to the market too a little bit more was sunflower seeds, and how you find the Fibonacci spiral equation in the sunflower seed patterning, right? And it's the most efficient way of packing as many sunflower seeds into the head of the flower as possible with the way they're designed, right? It's the most efficient packaging method. And then when you start to apply that concept to the market, right, and you think about every single candle that takes place, most oftentimes those candles will retrace 50, 61% of the previous candle's body almost all the time, right? So it's when you don't have one of those candles, right, or when you have a candle, as we see here on the 5 minute, that does not have a back test, at least yet, right, that would be inefficient. We are not efficiently packing the candles into the canvas, right, or into the market, or the allotted time for the trading session, right? That's inefficient right there. We could have more efficiently traded that market if we would have balanced it, right? But the market works on fear, greed, psychology, etc. So in that moment, across those two 5 minute candles, there was an impulsiveness to sell the markets down. And if we're not balancing the markets efficiently in the sense of basically zigzag, right, go down, go back up, go down, go back up, right, then the energy has to go somewhere. Well, if it can't go, if it's not backwards, it's forwards, right? So that being said, when you do not basically balance a candle right away across any time frame, it's going to go to the 161 normally. It can go more than that, but just in general, right, in the terms of Fibonacci, that would be the sequence, right? If you're not pulling back the 618 initially, you're going forward the 1618, right? And so what we're seeing in this instance across those two 5 minute structures on the ES there was inefficient distribution of the market. Well, not really. It's actually efficient, right? Because we didn't go to the 618, so we just took we just moved it forward to the 1618. So it's still efficient, but there is an imbalance there across the 5 minute cycles because in theory the 618s aren't tested, right? But we did take that energy and we moved it forward. So we still balanced the market the way it was supposed to, all said and done. But now you can kind of think of those as untested areas in the market, right? So, as the market bounces up, like we were talking about, not being bearish down here, because there's just too much, right? You're shorting into a monthly, you're shorting into a weekly, you're shorting into a daily, all at the same time. Can't do that, right? So now you're bouncing, right? And that bounce is going up, right? And we were talking about, well, one of the levels we might try to take this back to is 6, 7, 8, 9, right? And that's just because that's the most recent weekly, it's the most recent weekly breakdown here on the ES. Now, granted, market doesn't have to go perfectly to any of these levels at any given time, because there's always so much going on, right? But if we look at sort of the bigger things in the market, those would be the bigger fibs. And then, as we were just talking about, remember we were talking about the NASDAQ and how you had a 1 minute imbalance here. We just balanced that candle, right? So that was one thing, right? Was to balance that market. Now, also look at this 1 minute down here. See how this 1 minute never tested its golden pocket, right? So if you run the fib here, off that 1 minute, obviously without it testing the golden pocket, where does it go? It goes up to the 161, right? So let me zoom in here a little bit. We're going to bring this up. So we just talked about those 5 minutes. Well, here's a 1 minute off the low on the NASDAQ. So you printed a candle, and instead of the next candle coming down to the 61.8, it goes up, right? Where does it go? 161. Now, that's a 1 minute structure. It's not your trading. It's just in general, that's how the markets are going to balance themselves, essentially. And so that's that, right? And now, if you think about where this, so if you think about the previous 1 minute candle, this one back here, remember this 1 minute candle did not have a golden pocket test at the time, right? So I'm just going to delete that. I just did that to show you. It didn't have a golden pocket test. That golden pocket test would have been about right here, give or take, right? So you can see how this one that was not balanced, we came up and balanced it, right? And at the same time, as we come up to balance it, we print another 1 minute candle that is unbalanced and arguably has a 161 that exceeds that level, creating that as a desirable micro target, if you will, and so on and so forth. So you can see how you can get a little crazy with all of this stuff if you really want to, but those are some of the things that I do currently now think about as I use some fib stuff, overlapping our longer term time frames, and then looking into our micro time frames to see if the micros confirm the long terms, right? So you know, kind of like, and for example, you see this 1 minute candle up here. We know that if we fib this 1 minute candle, it likely has a 261 or a 361 that lines up in this bottom area, right? So if we take this fib on this 1 minute candle and we do something like that, and I'm actually wrong, right? It exceeds that. And even there's one back here, so I could do this, right? If you take this guy, it exceeds that one too. And so that's what I mean. These are 1 minute markets. But that's another thing that I look for is, you know, do the 1 minutes or 5 minutes have extensions that confirm longer levels and things like that. So you can get a little crazy with it, but yeah, once you kind of realize it's really just the same pattern across every single time frame, which took me a long time to learn too. But it's really just the same exact thing across every single time frame. Everything is literally just the same thing across every single time frame, no matter what you do, whether it's SMA, fib. It's all literally the same pattern. It really is just fractally repeating. So, yeah. Cheers. Yeah, so anyways, if the VIX remains over the price of 24.89, then we have a better opportunity of spreading fear back into the market. So that's kind of what we're watching for today, is whether or not the volatility index. I mean, there's a lot of things we're watching, right? You know, I'm watching freaking golf on one screen and looking at them. There's so much we're watching, but no, I'm kidding. We're really just watching to see if the VIX spreads fear into the market today and we break down, and if not, then we'll continue to rally the market. That's as far as volatility readings go. All you got to do is really watch the price of $25.48 right now on the VIX, and if we're maintaining that, the market will probably pull the market back, right? If we break that back down, then we'll look to continue bouncing the market. VIX is not necessarily a leading indicator. It's more of a confirming indicator, right? Right now, the market is definitely fearful. Everyone's a little on edge. The Iran thing, oil going up, gold this, Bitcoin that, your mom here, your dad there. Everyone is worried of something. And as a result, oh, my back is just cooked right now from snowboarding for so many days. Yeah, so everyone's scared to some degree, as the VIX suggests, being up at $25 or $25. But yeah, so everyone's fearful. But SMA trend is also an indicator for triggering action, right? So the SMA calculation right now for the VIX is 25.52, right? If we maintain that, it allows for, it's telling the algorithms that we're not remove like we're not starting to remove fear, right? You can have a high VIX and be signaled to go long because we start to break down the VIX, right? But if you have a high VIX that doesn't break down, it just becomes a back test of support, and then the VIX keeps going up. And then what's that do? It tops the market, right? So this whole bounce that you're seeing going up can still really just be a VIX back test of support and a market back test of resistance. So if it was a long bias market, this would be a dip to rip scenario. We're in a high elevated VIX. This could basically be a pop to big short scenario still. So don't get excited about the bounce. We're still in a high elevated VIX market. And until we for sure know that the VIX is breaking down and fear is being removed from the market, then in theory still be fearful, right? So be more in a fearful trading environment market. Don't be fearful, just know the environment, right? And so the environment is just that. It's still a pop to sell market, just after a significantly big short squeeze rally magoo yesterday. But like I said, if we're meant to be in a bear market, this is kind of the trading action you get. You get huge oversold bounces and then you sell them back down. And a lot of times we fade the market in the afternoon. So if you see the morning bounce up and then you fade the afternoon, that's like couldn't be more picture perfect, clear. Like that's just how bear markets work. We've thought we'd be in a bear market in 2026 or go into one. We'll see if it happens. Who really knows? We'll see, right? But yeah. So one thing's for certain, right? If we look at yesterday, this is the NASDAQ monthly. That makes sense. Yeah. So if we look at yesterday, though, just in general, right? Yesterday was a really big day. Let me just double check some stuff and make sure I have this correct. This is a little off. Hold on one second. I'm gonna refix this one. Okay. Let me just double check this guy. Yeah, that one's accurate. Well, it could be a little more accurate. Oh yeah, sorry. Same thing here. Remember we were talking about the 1 minute candles and the 5 minutes, right? So this daily candle, same thing as the 1 minute, same thing as the 5 minute. This candle is not balanced down to its golden pocket, right? So arguably, that's something that's on deck today. We'll see. We're now coming into the next fib level. So you can kind of see here we're coming down into your next little 1 minute supports, arguably on the ES, right? So the ES is now completing its pullback to 78.6 from yesterday's price action, right? So if you think about yesterday's price action in general, from highs here, blah, 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 we're just coming into a little bit of a support over under there on the micro. So if you get a little bit of a pushback here, totally normal. And yeah, so cheers. Hopefully that makes sense. So as long as we stay below the SMAs and whatnot, we'll arguably roll this market down a little bit more to each fib level. All right, So right now, this is kind of the area where I've been relatively focused on, down to like 675, 691 on the ES. But like I said, we're coming into some of the daily stuff right now. So again, you can't really be too bearish leading into that daily. So 1 second, see 67782, right about there. You can't be too bearish leading into that. Again, that's a daily level. So, and that's from yesterday's price action, which is a really big day. So, arguably people remember yesterday more than they remember the past month, maybe the past quarter, right? So when we look at the quarterlies and we look at the monthlies, like those are big macro levels and, they matter. But people's brains forget quickly. They're more in tune with what just happened, right? So we kind of look at those bigger levels for kind of a gauge on where bigger shifts can kind of go to as well. But a lot of times it's the previous days and weeks that are more fresh in people's memories. But like right now, right? If I look at the SPY, right? Watch this. So like right now, if I look at the SPY, I'm paying attention to the quarterly as well. So right now, this little bounce you're seeing is coming up to the quarterly. If we look at the SPY right now, this is the quarterly 61.8 level. So we're basically just doing an ES bounce from yesterday's action up to currently the SPY's quarterly, which is right about there. So I could see that as a potential fib trade from yesterday's action to back test this quarterly breakdown, right? If you look at the quarterly here, you just did what? You broke it down, and that would be a micro back test while using the daily as support. That's, so there's so many trades that take place as far as fib goes that I'm seeing it. Like, I could talk about this stuff all day long. There's about 16,000 different trades that are going to happen based off of fib. But like I said, the more simpler thing is just trying to keep everyone arguably on the right side of the trend as it relates to, the SPY and VIX and things like that. Because a lot of times that's going to dictate, kind of like we just saw yesterday, a big oversold bounce back to trend. Now we're deciding, are we going to, hold trend positive or break trend down today, right? While at the same time, seeking out liquidity levels based off Fibonacci and running Fibonacci sequences and so on and so forth. So hopefully it all makes sense. Also, I think I remember saying, there's a guy that's we're doing some hardwood floors in our house, and floors got messed up, back order, blah blah blah. I couldn't do it. So, anyways, guy's coming today to start doing some of that. So he might be running should be here relatively soon. So I'll have to hop off and get him in here and all situated. And then probably gonna be hearing an air hammer go off, so I don't know if I'll continue streaming or not, but we'll see how bad it gets, and then you guys can let me know if it's too much. But if I have to stop streaming because he's running his nailer and it's getting crazy, then so be it. But I would like to have my floors done. I've been living in this house for a couple months without floors, and I would like to get them done. Good morning, Mike. You were missed, buddy. You were missed. Thanks for, I guess I'm back. Yes, thank you. So, we've covered a lot. So, hopefully you can take the information that I've given and use it wisely. And currently, obviously, we're bouncing right now on ES and stuff, and so pretty much, if we would just be looking up to about 6, 7, 8, 9 for the moment. Arguably, that's where that's the monthly level that broke down, and I don't know if it really had an efficient back test. We'll see. Like, if we're going to continue rallying this market up over these highs, even if it pulls back a little bit and then goes, we would probably be looking at the market back testing the monthly level. So this is kind of, again, if we start to clear house on these 1 minute highs, you pretty much would expect the market's probably going up to that monthly level. That would be the next fib kind of there that I could see as it relates to the ES there. All right, that's the only thing I could really see the market would want to do in that like short term on the upside there. But yeah, that's pretty much. Oh yeah, let me double check one more thing. I think it's the 50 SMA level. I kind of forgot what that price was. Yeah, the SPY's 50 SMA is currently priced at 676.95 too. So kind of like into the open. If the market pops up and goes for a back test, that's arguably an area where the market will try to get to, and so on and so forth. Because that's the 50 SMA, right? You know, like 5 minute momentum is kind of slowing down right now on the NASDAQ. Arguably trying to turn positive. Don't know. We'll see. The 5 minute stochastics gave a buy signal too a little bit ago. I'm just noticing on the 5 minute. So you kind of got a 5 minute buy move on the stochastics coming off the monthly supports there. So probably has already helped it kind of start bouncing a little bit there. 1 minute momentum on the ES is slightly positive, moving back to the zero, so not really bearish there. The ES 5 minute down here is maybe trying to turn positive. Also has a stochastics buy move, so there's really nothing there telling us to be too bearish in that bottom for the moment that I can see. Doesn't mean that it's going to change or stay the same or won't change or will change, etc. ES is starting to kind of get over its 1 minute 50 SMA. If algos want it, they could maybe pop it over the 1 minute, flip the 1 minute positive. Excuse me. Man. The VIX is coming back to the $25 price, so that's the VIX coming back down to the 50. Do I have that priced right? I hope so. Again, the bounce we're kind of currently seeing on the market, which isn't huge. But again, we are bouncing some daily stuff, some monthly stuff, some weekly stuff, just kind of a lot of little supports lined up there in that bottom. Enough to obviously create at least a small bounce on the market. And yeah, I would say this bounce has caused the volatility index to come back down to its 50 SMA in the pre-market session. If we start to slip the 50 SMA, could help boost this bounce a little bit more. We'll see. We're kind of at a little hesitation point because of the volatility index. Yeah, I mean, we'll see. 5 minute market on the NASDAQ, still in kind of an oversold condition. I mean, we'll see. And again, like I said, we'll be just in general, the monthly market on the NASDAQ is 24917. So if we start to come below that with confirmation at some point today, and then we'll see the market's down a little more. And so just same old, same old. There's a bunch of stuff we could talk about, but I don't want to just keep rambling on. I'm sure you guys are probably already bored of it. Yeah, so the brief summary would basically be we're kind of in the decision day of whether or not. Good morning to Crypto P. We're in the decision of whether or not we are going to bounce, or sorry, continue the long / continue the short, which I guess is the name of the game every single day. Is the market going to go up or go down? But yeah, we have the VIX right at the 50 SMA. The market's right about the 50 SMA. So today's going to be an interesting day in the sense that we get to try to break the market down or break it out from the 50 SMA. And then along the way, I've added a whole bunch of new fib stuff that we can use and play with that, will be fun. So again, market's kind of boosting up here off this bounce. When we look at the 1 minute, the 1 minute momentum is positive still. It's coming up and through the zero line with decent separation. The 5 minute market on the NASDAQ is still not really oversold. It's coming back to the halfway point, but we're getting there. Slight 5 minute momentum cross on the 5 minute with the NASDAQ coming off all these lows. Oh, sorry, man, my nose. So dry after freaking being out in the mountains for a couple days. Yeah, and the target here of this long right now is about 6, 7, 8, 9, give or take. Again, markets aren't always linear, give or take. So as we come up into 6, 7, 8, 9, that will be one of, that's just a destination point. So got to be a little careful because this now is a back test of the a weekly fib that was broken down, right? So we don't control the market. Now, is it going to hesitate and top here? I don't know. Right now, the 1 minute momentum doesn't say that it would, but that can always change very quick. Let me double check this down here. We don't have any 1 minute, I can't really confirm there's any sort of sell signal there on the 1 minute coming into that Fibonacci, so I wouldn't say it's, legit yet. But you do got to be careful. This could very well be a little bit of a hesitation point because that's the back test of the weekly. So if you do see some resistance here, it's totally normal as we complete this kind of long destination up on that level. And if we do start to kind of pull back a little bit here, some of the things the market would try to do is come back down to fill some of these 1 minute imbalances. Arguably, if there is any resistance there, that would be kind of one of the first things the market tries to do is balance some of the micro stuff. But yeah, Mike, sorry about that. Yeah, so a little bit of a decision day, whether or not we bounce and hold the 50 SMA. And so that's kind of what we're going to be doing today. And don't know yet. We'll see. It's going to be interesting. It'll be a fun one. Again, you got a high VIX. Markets are a little fearful in that regard, obviously. But yeah, so do be mindful of that. We do have an elevated VIX, so you got to be slightly careful because you don't want to take on crazy sizing and get blown out. All right, so we would basically say that that long target is complete on the ES here, right? We've kind of rallied all the way back to that weekly that broke down, so that long is arguably complete. So just an FYI. Interesting. $850. Was that the guy? No, I don't think it was. But anyways, yeah. So as we come into that weekly, that long bounce up, like that sequence of events is complete. Now it's up to the market whether or not it wants to have resistance here on this fib and then work itself back down. And if that's the case, and the market does work itself back down from here, even slightly, like we said, some of the first things that it'll try to do is balance those 1 minute markets. Then, arguably, if there's anything on the 5 minute, there's really nothing on the 5 minute. Actually, there's this doji up. Let's see, that's interesting. Yeah. The only other thing I really have is like, sorry, where did that go? Should have been. Did I delete that one? Huh. I don't know. Anyways. Or like the SPY. I was going to look at the SPY. The SPY has this quarterly backtest on at 670, 615. So if we do work resistance here, we might see the SPY try to sell all the way down to 670, 615. But I don't know how I feel about that because that's a quarterly. That might be kind of challenging. Well, let's see. Hold on. Thinking about the ES here, right? Because we did this cycle here from fib to fib. So if you go like that, the 50%, we're at the golden pocket of this leg down. So to prevent this program or this sell leg from getting blown out, it doesn't want to go above the golden pocket there. Yeah, that could fall into 61.8 from yesterday. I see. Yeah. Well, anyways. That's a lot to take in. Just let me ramble and, just let me figure out my jam. Yeah, we still have, like you can see, the 1 minute momentum is above the zero line right now, so it's not really favoring the micro kind of bearishness to begin with. 5 minute MACD is still kind of positive, moving upwards, just in general. So something else that we're considering too, or I'm looking at least, is the NASDAQ up to 608.80. That's another thing I'm thinking about. which is basically the next kind of long sequence with the market getting acceptance over this weekly. So still a little too soon to tell if that's going to be the case, but or again, Nasdaq back up to 2005.38, 25038, etc. So yeah. All right, because again, think about it like this. Right, if you're looking at the Nasdaq weekly market here, right? What's the market? The market that the Nasdaq is in is from here to here, and if it bounces, it could be bouncing from here to there, right? So we can't look at the Nasdaq and say the Nasdaq should be. I mean, we could say it's going up to here, and we could say it's going down to here, which at some point it's going to do that anyways, but just the current market we're in based off of the weekly structure on the Nasdaq is just from this is the structure from this fib to that fib, right? And we're not going to be opening the door for the next ones until we're outside of that, right? So the only thing that can, and if we think about the market has to be using a level somewhere to dictate market price action, right? This weekly there's nothing else to look at, right? That's just it. Now if we move down to the Nasdaq and we look at the daily, right? This would be the daily, right? Where the daily has broken down, right? So the daily's broken down. So does the daily cycle to the next one down, right? Etc. So what I was just getting at is there's not a whole lot I can look at right now for the Nasdaq to kind of dictate this inner market. It's really the ES. The ES is the market that I'm following for the moment because the ES is currently at its weekly 61.8. So if we're getting acceptance on if we get acceptance on the ES back above the 61.8, then that opens the ES market for room up to 6812, which then means we would what? We would complete the Nasdaq's move to 25,000, right? Because if the ES were to rally all the way to 6,800, then we're easily going to take the Nasdaq up to 2,500, unless there was extreme divergence or something, right? So on and so forth, right? So the reason I would say the Nasdaq is hesitating right now is because we're unsure if we're going to reject the weekly 61.8 here on the ES, and if so, we're going to put a lower high in on the market on the ES, and as a result, we're going to top the Nasdaq here prior to its fib level. Therefore, anyone that's targeting this fib up of 25,038 for this weekly Nasdaq bounce will be pissed off because they're going to miss their long target because we did a short on the ES here, right? So that's how we prevent markets from going to their targets, and it shies a target, right? And it doesn't mean it won't go back and get it later. It just means for the moment where there's too much resistance on the ES to allow the Nasdaq to continue its grind higher, because this is our current resistance. As you can see, we're starting to kind of top a little bit, right? Just like that. Now, pretty much I have to give all kudos to my business partner Brandon for teaching me all this stuff over the years, right? And I never really, taught it because that's just his thing, over the years, right? But and because I just didn't know it well enough, and now I'm kind of starting to pick up on it enough, and I feel like I can read the storyline okay enough to the point where I'll touch on it and start talking about it. But yeah, so that's it. So we're basically topping in the short term ES here, right? And that's preventing the Nasdaq market from going up. And we're doing so on a weekly Fibonacci on the ES. And if we have strong enough resistance, I could see the market going down on the SPY to 676.15, because that is the quarterly fib that we broke out, and we only have a micro back test. That's a bigger target. The more easily attainable stuff would all be on the 1 minute here, looking at the 1 minute market that wasn't balanced. Remember this 1 minute, remember that 1 minute candle right here? Now it's balanced. That was that green line. That was the golden pocket. That 1 minute candle's been balanced out, right? So that's how we use a longer term weekly fib to then target back down to a shorter term 1 minute imbalance in a market, okay? So that little micro pullback trade, is done. That's complete. All right. And in theory, what you're going to see right here, watch this. You'll probably see this candle bounce to the 1618. Ready? Watch this. Because this is the 1 minute market. And we just completed the golden pocket, right? So if the golden pocket wants to bounce legitimately, it would bounce up to 1618, right? Which is, then that creates your 1 minute lower high. You know what I mean? So if you if this does its successful 1 minute golden pocket bounce and it gets over the 100, right? This would be your 100. The market bounces to here, right? If it doesn't, again, this is very micro structuring of a market. But that's how you'd end up creating that little pop that then may create your 1 minute lower high off the 161 completion there in a 1 minute micro market. I know that's a lot to take in, but yeah, so I don't think the internet's ready for all this shit. And it's just taking me so, because this is how my brain works. This is why it took me so long to learn this stuff, because I can only learn by going the long route. But all said and done, it's lethal, my brain, because it's such an analytical brain that when I finally kind of clicks, it clicks, and it's starting to click, and it's going to be dangerous for the internet, unfortunately. So yeah, so that's that. So that's that 1 minute micro pullback to 1 minute fib completion. And then there is the 1 minute Fibonacci hold. And everyone that's shorting the weekly is now squeezing themselves out, Again, there's so much to it. And like I said, I'm still learning a lot of this, but boy, has it been, it's been fun. So after I've lined this up with all my SMA stuff and VIX stuff, it's become quite the lethal combo, if you will, which again, So yeah, so that's that. So again, we're still basically just trading the Nasdaq, we're just trading ES right now here at the weekly fib. So again, we're right in the golden pocket on ES on the monthly or on the weekly. Sorry, I know there's a lot of charts here, but and again, I'm zoomed in on a 1 minute, but if I were to zoom out on a 30 minute, it can kind of become a little bit more clear to a degree what we're doing, right? We traded down to the 161 yesterday, rallied the market back, went into a 30-minute uptrend on the ES. If we go into an uptrend, we look to just hit fib levels up, right? Now we're in the golden pocket of the last week's trading action, which can get a little bit awkward, right? Because you're not in an oversold condition, you're not in an overbought condition, you're just right in between all the action, so you can it can be a little bit more of a challenge. And right now we're trying to decide if we're going to hold resistance on the 61.8 and move lower down, or if we're going to end up reclaiming the 61.8 and we're going to blow some shorts out and we're going to rally it up, all to be determined. And today we have the market right at the 50 SMA. So you have a day where we're about to open up. Let me see where the SPY is priced at. Hold on, I got a text message. Hold on 1 second. Good morning, it's the guy. What time are you coming? Okay, sounds good. All right, my bad. So it is 9:02. We have 30 minutes-ish, 28 minutes till market open. The market currently is priced right at the 50 SMA. So I don't know if we're going to open here or whatnot, but like I said, it's going to... If we were only, right, regardless of all these other fibs that I keep talking about, if we were only looking at this weekly Fibonacci structure on the ES and we were trying to say, where's the market going to go? And what's the most probable thing that's going to happen? It would be if, 1 second, let me pull this chart over. This doesn't look like much. Well, I'll pull up the SPX, right? So this is, and let me delete all this other stuff. I'll pull up the SPX. This is what we're doing. We're trying to decide what direction we're going to move the market away from that SMA, right? So kind of like back here, right? Are we going to break it up and move it up? Are we going to break it down and move it down, etc.? Whatever way the market wants to shift its momentum on this 30-minute structure day, we're totally fine with. In whatever way the market ends up picking is just what the market does. And if it picks up, then we're going to look to target some fibs up. If it picks down, we're going to look to target some fibs down. And it's all based off of us collectively as a market going, all right, well, I guess we're bearish, or all right, I guess it's bullish, or the market's bullish, or the market's bearish, and we're going to go to these fib structures. That's it. And we're going to look at the volatility index. The volatility index is priced exactly the same as the S&P 500, which is right at the 50 SMA. So we're on a day where algorithms, in my opinion, are going to be going crazy, right? Because you have the VIX right at its trigger level, and you have the market right at you. They're both going to get triggered. One of them's getting triggered, right? You're poking the beast right now. And you're right at the 50 SMA, so the algos are going to go crazy today. And if it's a day that's easy and the market gets acceptance below, we could easily just roll this back into a short and go target some fibs down, the golden pockets of some stuff. And if we get acceptance up, then we're just going to be targeting fibs up. And so that's the game we're going to play today, which is which ways the VIX want to hold, and which ways volatility gonna stretch. We're in a fearful market, so whether or not the VIX breaks down and the market got boosted up, we're still in a fearful market. So the stretch can be violent, but yeah, if the VIX breaks down, right, the initial stretch can be violent, but if it can persist for days, then we're going to start slowing because the VIX will go from 24 to 20, then to 18 and whatever, right? So right now we're still in a high volatility environment, regardless if the VIX breaks down. But if we hold support of the VIX, then we're in an elevated VIX environment with confirmation of continued up for the VIX, and that's going to be tough, So I personally, and the other thing too, I just thought about is the VIX is coming out of $31, which means it already hit. It was way over +3, +4, which generally means the market's going to top, which it kind of did top. So that means it probably should continue. Debatable. That's another thing I'm thinking about is normally the VIX always tops when it gets up into the +3, +4s, which has happened. So I was initially thinking we should be bearish today if the market breaks down. But if the VIX is coming out of such a high price environment, is it more favorable to keep drowning the VIX and boosting the market? All the questions I don't have the answers to. That's why it's always going to come down to, we'll see. Does the VIX break out or does the VIX break down? Does volatility move away or not? So it should be an interesting day. I think the algos are going to be talking like crazy. So yeah, that's all that good stuff. So anyways, right now market's still having some hesitation here. Still having some hesitation at that weekly level. All right. So again, you can see we're kind of hesitating the weekly. 1 minute starting to turn a little bearish. I'm actually going to throw some. Why does this always preset save? I don't like that, but it's going to, whatever. So, come on. Maybe one day. There you go. That's the other thing too is the 1 minute already gave the sell move leading into. So that's another thing I've been watching that's kind of been fun and has some confluence is following stochastic signals at specific fib levels. That's been kind of interesting. Sometimes it can be a little bit of an early signal generator because if you look at like 1 minute MAC, right? 1 minute MAC flips bearish as we kind of pull the market off the fib, but the stochastics gave the negative cross kind of leading into it. So sometimes it could be a little bit of an early indicator there of temporary tops and things like that. So I wonder what the 5 minute's doing. See, like if you look at the 5 minute, right? 5 minutes positive leading into it. So, But then again, the sell wave prior was far bigger. This is still relatively small. There was, see, like down here too. See, like if you look at the, actually I should bring up the NASDAQ for this one. So if you look at the NASDAQ, this is what also helped us with that bounce. Remember I was talking about the NASDAQ's coming into this fib, and we're probably going to look for support here first, right? I could see that we were getting a buy signal here on the Stochastics 5-minute leading into that fib. So it's kind of one of those scenarios. It's like you got a buy signal coming into support. Like, do you really want to be bearish for the moment? Probably not, right? So that was that. Yeah, so anyways, lots going on in the brain, you could say. So, like, coming into this one here, I don't really see it as mega resistance because, again, you kind of still have some positive MAC here on the bottom. Like you said, it's just, I don't know, I don't think it's the greatest sell move here on this fib for the time being. I think it's just temporary resistance, and we're going to have to wait to get into the open and really see what's going to happen, because the open's going to determine, well, not the open, but just market open, right? Again, it's going to be that 50 SMA jam. So for the moment, we're just kind of chilling. Yeah, anyways, that gentleman said he was going to be here in like 30 minutes, so probably have to hop out here in just a little bit. Ba-da-ba-bum-bum. And real quick, you know, just an FYI, is that the ES is arguably, I would say, a more followed market. I think that structure works a little better on the ES in general. But anyways, so right now, as far as Fibonacci is concerned, it would, and this is all relative, I guess, it would say that this is still a strong market, right? Pullbacks to the 78.6 are considered strong pullbacks in the sense that if we're maintaining it, there's still strength in the market, right? So you can see market stays up and elevated, right? Then we fail to maintain over the 100. Breakdown, go to 78.6, right? Now, if we are going to break this this 78.6 down and then trade into the golden pockets today, that means the S&P 500 will have to break down the 50 SMA, and the volatility index will have to maintain over its 50 SMA to get that move, right? If the VIX ends up breaking down and not holding support, we'd be more likely to see a scenario where we rally back out and up to like 6817, right? So something we can follow too is the Fibonacci from the from leg to. Let me just delete all this stuff. Please be able to do it with the Control Z. Please, dang it, I only do so many. I got to figure out a better drawing tool for Thinkorswim. Sorry, but yeah. So something else we can do is we can basically just run a fib from this structure here, from low, from this fib to that fib, right? And if we're not getting over the halfway point of that leg, then we are still kind of leaned on that low side. And if we're clearing the halfway point, we'd be more targeting back up to that high side, right? So again, because that's the playing field of the ES market currently, is from this fib to this fib based off of yesterday's action. And from that sequence, measured, the halfway point is pretty much where we're at. You can see we've traded back to the golden pocket of this entire swing leg. So this is daily Fibonacci that you're seeing with a swing leg Fibonacci overlap, right? So the swing leg you're seeing, that's the more, and you know what? I wonder what it would look like if I, because I'm actually measuring fib to fib as opposed to high to low. But if you went high to low, you'd really be like, oops, sorry, you'd really be all the way up there like that. So one could do that leg, but if we just did the fib, and really whatever way you want to do, it's fine by me. But I'm just gonna do it like that, fib to fib. Okay. So if we go fib to fib, then that would say right now we're basically maintaining the golden pocket of that leg, right? If we start to clear out over, you could see how maybe a bull flag might do this and then breaks down or would break up, etc. So if we maintain the low side of this swing leg, we would be more likely to roll down and out. But we're going to need the confirmation of volatility breaking out to swing this market more that way, right? So however this market wants to play is cool by me. But like I said, that's the ES stuff there. Obviously, there's more to it if we look at the NASDAQ, but that would be a pretty simple breakdown, I guess you could say, of how that market is structured a little bit. Then looking at the NASDAQ here, right? So if we go to the NASDAQ, I'm going to put this on a 1 minute. All right, and we go to NASDAQ. We can do the same thing. Ooh, sorry. All right, so the NASDAQ is right at the same spot, right in that golden pocket area. Start clearinghouse up and over. That might constitute for a bigger back test, which would be up into like whatever, 25,000 and some change. Again, we'll see. Time will tell. And part of that bigger decision making is coming down to the weekly ES. And that is, does the weekly ES want to maintain below, or does it want to break back above? So we're kind of waiting for the VIX and just kind of everything to shape up, you know. If we hold that weekly resistance here on the ES, we're not going to launch. We would most likely not launch NASDAQ, right? Or NQ. So, yep. Oh, gosh. Oh, boy. Now, I'd be more inclined to like basically sell the market down off this weekly once I feel that maybe it should happen. I don't know. Like right now, the MAC on the ES is slightly positive coming from an oversold condition. There is no 5-minute sell signal on the stochastics off that fib. Currently, the 1 minute momentum's like slightly bearish, not enough to take it below the zero line and swing things down. So we're just kind of on that steady hold and maybe even grind up for a second. I don't see that the MACDs for the moment are confirming like just immediate down. Again, things can also change quickly, but holy cow. I'm tired, man. I am tired. Holy cow. Oh, gosh. The beauties of sleeping terribly. You're always tired. It's a great life, just never being rested. What you gonna do, little Vixie Pooh? I see. Good morning. Good morning. Good morning. Good to see y'all. All right. So pretty much, like we said, it's going to be a main game of following the VIX and targeting some fib levels. Yay. We're going to probably have to wait to get to the open at this point. Oh, gosh. Oh, sorry. Just, I can't beat the yawns right now. I can't beat them. That's another interesting thing. It's right above that high. Oh, let me pull this back here a little bit. Sorry, get off this guy. Real quick, we'll just kind of go over this again because why not? Again, just a refresher, right, of where we're at with the monthly structure on the NASDAQ market. On the monthly structure of the NASDAQ market, we are pretty much, we're over this 50% fib, whatever. So we're right in the golden, are we in the golden pocket? Yeah, we're right in the golden pocket, right? So if I zoom out a little bit, we're looking at a 4-hour chart. On a 4-hour chart, we're right in the golden pocket of this monthly structure, right? So basically, that's the playing field of this monthly market on the NASDAQ, right? Unless we're below here, we're not looking down, right? And if we're just holding support, it's either support and back up to the fib above, or break down and go to the next one below. So right now, there is the Nasdaq market is getting supported too on its monthly Fibonacci here, which is again 24,917. So when this market breaks that fib down, we can be a little bit more bearish on the Nasdaq because of that monthly breakdown, right? When it breaks out over here, we could be a little bit more bullish the market because we're breaking out this high, which would just be that monthly structure, right? So until we're above or below there, we're kind of like in between this monthly market, right? Looking at the ES here, let's flip this to our 4 hour, 9:24. We got 6 minutes, right? So looking at the monthly structure here on the ES, we have completed the 161 destination down, right? The market rolled down to 161 and now bounce on up, right? So we've done that, all right? So looking at this market, it has yet to test the golden pocket. It's still having what you might call some resistance at the 78.6 fib, right? So obviously we would say to ourselves, if the ES market is reclaiming above 6807, we may start to consider rallying the market up to the 6855 level. Now, there is, yeah, you get the point. That so cool, right? So that's how the monthly markets are set up. So unless you're watching those, you wouldn't know, but you know, yeah. So that's that. Good morning. Good morning. Good morning. Good morning. Good morning. That's a doorbell. I will be back. That's my dog. Okay, we are back here. So cool. So NQ and everything, market's open, cool. Market shot up, blah 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 blah. So we have broken down the 30-minute. We've gapped down below it. So we're down below, but then that leaves the 1 hour. Okay. Yeah, we'll probably stay a little more long side of the market for the time being. The VIX arguably may need to sell all the way down to 2354 before like catching some support. And if so, I would imagine the market will continue to push up for the time being. We'll see. Again, we have the ES. It's just, I mean, like I said, we have the 6808. That's the monthly level. The NASDAQ may still have up to 25,127. It's just a matter of us holding above some of these kind of fibs that we just started breaking out there on the NQ and the ES and so on and so forth. Again, you see how we're running right into 25,6194. This is kind of what we talked about, which way the market decides to break first. Breaking up would lead, NASDAQ back up, et cetera, et cetera. So we're kind of hitting the first initial fib targets for that blast up on the long side. Oof, that's a rough one. That's actually a big sell move off that fib, or big rejection candle, if you will. VIX is still undecided. Sorry if you hear a lot of banging in the background for the moment. Looks like the Nasdaq is rejecting this 25,038 for the time being. So as long as the Nasdaq stays below that, again, and if we end up breaking down the 6, 7, 8, 9 level, that could be some danger for the market. Interesting. There's a break on the market a little bit. Be careful, be cautious there. We're starting to break down that 61.8 level on the ES. And that's what I'm trying to figure out too is we still have the VIX coming up to the 30-minute 50 SMA. It's below it. So we're kind of bouncing the VIX back to resistance. That's creating a market pullback, right? And if the VIX doesn't break out the 30-minute, this, again, that's the danger, right? So let me bring up the VIX just so you guys can kind of see it real quick. So this is what we're watching, right? So the reason the market's pulling back a little bit, we're bouncing the VIX back to the 30-minute here. If the VIX gets love over the 30-minute, market continues to pull back. If we get some resistance around that 30-minute and do something like this, then we're going to take the market back up long, right? So in all that, we're trying to gauge around some of those fib labels. Where did that just go? All right, and also right now our kind of downside destination is, again, around that 50 SMA on the SPY, which we pretty much already did. SPX 6,776. So again, keep tabs on 6,777 on SPX. That's that 50 SMA over under, right? And like I said, we're just right in the middle of the golden pocket on the NQ monthly. That does not make it easy. If we start to break down 24,917, that would be, you know, a little better for the market in terms of downside action, you could say, as we get below some of those monthly levels. VVIX still holding support there, so some people are still hedging. Yeah, so again, you can see we're just kind of just holding some hesitation right below 25038, give or take. Again, that is that weekly fib. If we start to clear house over that, arguably might kickstart a little bit of a long press. Below it still runs the risk of a lower high. We're still below the monthly. Again, we're just kind of trapped in between some monthly stuff. So bigger breakdowns aren't going to happen and bigger breakouts aren't going to happen until we get over the monthlies. So really all we can do is just play around inside the weeklies, which right now we are, you know, using this little weekly here as a temporary resistance. The VIX is just basically sitting. Doing a whole lot of nothing. Come on, what we gonna do here, market? We're just sitting right on the ES golden pocket, 61.8. Need to give that up to run the next guy down. It's kind of just the waiting game right now, folks. Again, right now the NQ is having resistance right off its weekly, so it's preventing us from popping the market. Five-minute MAC really isn't even bearish coming into that fib. At least not yet. It's reset though. It's reset to the 0. a quarterly. It's a month, a weekly. It's a lot going on there. Good morning, guys. Again, once we start to get over this 25,038 mark, you might see something pick up there just because that's where we've been holding the resistance. But there's a lot of, like I said, there's a lot going on here. I don't trust it because not only are we hitting this weekly resistance for the moment, that's also a quarterly level. So there's quarterly resistance, there's some weekly resistance. We're inside the golden pocket on the monthly. It's not easy there. So as you can see, we're starting to work some resistance off that. But again, we're not really below the bigger monthly levels, so I just don't really see it as a mega breakdown for the moment. I mean, yeah, it can go down, but it's, again, we're still inside monthlies, so without being outside of the monthlies, you're just basically trading in between the weeklies at this point, which is fine. I mean, arguably the weekly is all the way down to 24906, which is below the monthly. So if we do end up kind of sliding and actually breaking here some, we might look for 24917 on the NASDAQ. 24917 should be around right about the 20s. Gotcha. ES just took out its weekly at 61.8 there. All right, the VIX is now shot back up towards that 50 SMA, so we've effectively gotten the VIX back up to its level. Now it's just a matter of whether or not the VIX actually starts to get acceptance above basically 25. If VIX starts to get acceptance over 25, pretty much, then we should see the market roll. So, yeah. And if the market rolls big, then we arguably see the NASDAQ down towards like 24917 or so. Yeah, there's a lot of bang in there. We might have to call the stream there. Sorry, guys, but I mean, I can only imagine it's going to get worse. But you know, real quick, before I do go off, I kind of want to show you guys what I'm looking at. All right, so this is what I keep talking about on the NASDAQ, right? We're in between the monthlies and the golden pocket, right? So we're not going to see kind of that. We don't have a breakout, right, or a breakdown of these monthlies. So we're simply just kind of trading the price action of the NASDAQ on the weeklies, right? So you see here on this weekly scale, see how we're kind of catching wick resistance, rolling it down, etc. The ES. So right now we're trading on weekly levels. And once we get outside the monthly, we should see a bigger expression in the market. But right now that's not the case. We're on the weeklies, trading on the weeklies, the dailies, and then it's going to be in an effort to arguably take us up and outside of the monthlies. So right now on the ES, it's a little bit of a different story. On the ES, we're actually kind of on the high side of this range where we're having a little bit of resistance off the monthly, right? So if we roll the monthly on the ES, we're going to be targeting down to 6748, right? Once we get outside, we'll look up. So we're kind of still a little bearish here on the ES due to that. So, but anyways, I'm gonna let you guys go because it's gonna get crazy here, and I'll catch you guys back tomorrow. But he's gonna be here working all week. It's again until I get outside of March, it's gonna be sporadic streaming. I just got a lot of stuff going on. So, anyways, cheers, guys. I'll catch you soon. Have a good one. Maybe. I don't understand why. There it is.